Welcome back to Two Stupid Guys Trade Stocks. I'm Vinny.
I'm Dylan.
And today we're going to talk about my next value pick in our series, and that stock is Hologic. Hologic is a very interesting company. They are in the medical field. They legitimately save lives, and they played a big part of the COVID-19 pandemic. The real question for them going forward, as you're going to see throughout my presentation here, is whether
they played a big part of it.
Yeah,
they caused it.
No. Like in the testing and mitigation of it.
Oh, okay.
Yeah, exactly. They produce a system which detects COVID. All right, let's jump right into this thing here. So Hologic, ticker HOLX. Just a disclaimer there. I am long this position. I initiated the trade on Friday. I picked it up as a something on my watch list that was down more than I expected it to be. So that's when I initiated the trade. So, and this is also far more risky than my typical value propositions. We'll talk about that in a second here.
I'm rubbing off on you, Vinny.
I know, right? A little bit about Hologic. They founded in 1985. It's a local company to me, out in Marlborough, Massachusetts. Predominantly known for women's health. That's kind of their major niche prior to this COVID-19 pandemic. They're up to about a $19.5 billion market cap, which is about 45% or so in the last year. This is a 12-month graph from Yahoo Charts there. So as you can kind of see, they've been on a general upward trend. However, this lags their financial performance significantly. Hologic was very much involved in a high throughput automated testing system, which they sold multiple units of last year, and then also the equipment to run said units. So they were actually up, I think it was almost 600% in earning per share last year. Yeah, exactly. Here you go. Right. 671% increase in earnings. They were pretty interesting prior to the pandemic. They, what do you call it? Not always the most consistent company as far as earnings. They were growing, but not on a consistent basis year over year. Like I said, predominantly, like their major innovations are in like women's health and breast health. They're control a good portion of the tomography market, which is kind of a fancy 3D mammogram, which has been shown to be about 40% or so more sensitive in detecting breast cancers than the 2D mammography. The other thing that they also are known for is for like pap smears for women's health, annual surveillance of her cervical cancer. They control about 80% of that market as of right now. The thin prep, if you recall that there, Dylan, that is
prep.
Thin prep. The little like liquid that you dip the brush in.
I remember.
Oh, you remember? Yeah, that is 80% of that market is controlled by them. So they are very much like involved in saving lives. I think even before the COVID-19 pandemic. But like I said, their prior performance is a little bit messy. A lot of acquisitions, a lot of growth by acquisition, and not necessarily classically organic growth. So here's a little bit of the year-over-year change in terms of revenue. As you can see, the diagnostics unit, which includes the COVID-19 testing, grew significantly.
Yeah, that's a lot.
However, I think the important thing to highlight here is that they by the end of the their first quarter 2021 is actually would have been the fourth quarter of calendar year 2020. They were pretty much back to their baseline in terms of sales in all of their other segments, from breast health, surgical, and then skeletal health. This is DEXA scans. So the real highlight, like I said, is the diagnostics, the COVID-19 testing. The question is, how much of that will they be able to maintain? So, yeah, exactly. So prior year, they had their major unit in this kind of segment is this right here called the Panther. The Panther is a high throughput automated machine which will run the samples and testing for COVID-19, amongst other things. It is amongst the COVID-19 high throughput testing systems, it is the most sensitive, meaning most likely to detect whether or not there is indeed an infection of COVID-19. And high throughput, meaning that like this machine is capable of doing more than 1,000 tests in a day, and it is almost fully automated. Obviously requires refilling of certain reagents and also insertion of the actual test samples, but it's definitely a great way to be testing on a large scale for COVID-19.
Yeah.
Prior to the pandemic, they had installed 100 of these units in the previous calendar year. Now, thanks to the pandemic, they installed over 400 of these units last year. So the units themselves are a portion of that increase in the diagnostics unit, but however, also the supplies are also a major contributor. So these are the other tests that can be run on that unit, the Panther unit. So most of this stuff is also still in the women's health kind of realm. As you can kind of see, you're looking for gonorrhea, chlamydia, that sort of stuff.
Yeah, we're getting real medical here.
Yeah, we are definitely getting very medical here. But this is where the real question lies, is that now that they've installed an additional 400 of these units, how much of an impact will they have that on their future sales? Like, I don't anticipate their diagnostic unit returning to the pre-pandemic baseline because they have 400 of these, large, like involved units that are out there in labs now. So the labs are going to be much more inclined to be using their services for these other tests that can be run on the same equipment. Now, you're not going to see it to the same, level that it is now, but you will see that, kind of penetration, I guess, in that market. You're also going to likely see some continued COVID-19, SARS-CoV-2 viral testing going forward, whether that's on a preoperative basis or just continued surveillance, or there's all this debate about whether or not it becomes a seasonal respiratory pathogen, much like these other ones over here are the flu and parainfluenza virus and that sort of stuff. So if that does have a possibility of occurring, then Hologic will be likely to reap some benefit from that.
So what you're saying is all these labs all over the U.S. bought the machine, which is extremely expensive. So now they're going to be inclined to use it over time, but they also have to buy materials to make it work.
Yeah, exactly.
Genius.
So it's a little bit of a subscription model kind of pricing there. So not only do you get the initial, kind of investment there, but you're also going to be continually selling them items to go with the machine.
Yeah.
This right here just kind of highlights that that was a comparison of multiple, like I said, high throughput COVID-19 assays, and they found that the Hologic one was superior to the rest. So, if you're going to be looking for efficiency and doing preoperative testing or surveillance testing, Hologic would be the unit of choice. So, major concerns, right? This is a company that had inconsistent profits before. Now the real question is, what are they going to do with them, right? And also, how long will these profits last? So, during their first quarter of 2021, they used the additional capital for three things. They paid down debt, they did a share repurchase, and they also acquired a couple of other companies. They said that these are mostly tuck-in acquisitions. They don't expect a great amount of work involved in actually integrating them into their own platform. And they are similar things in terms of like women's health. They didn't really go outside their niche. However, as a stockholder, you always kind of worry about companies that are acquiring, whether or not they're overpaying, particularly in this kind of market right now. But it seems like they've showed restraint. They said they've gotten deep into analysis with a couple of other potential acquisitions, and then they've declined to pursue it because it wasn't a great value for the stockholders. They also did approve a $1 billion share repurchase over the next 5 years, so they are interested in continuing to invest in share repurchases. I would like to see a little bit more in terms of that, given this recent kind of influx of cash. But I think at least they are aware that is a ideal market to kind of method to utilize that capital, if you will.
Right.
And then, the other kind of question here is, like I said, we saw their other segments return basically to baseline by the end of the year, is that this increased presence throughout the medical system, and they specifically highlighted internationally. Will that lead to future growth in their other business segments now that they have interactions with these large hospital systems and governments all over the world? That's a very distinct possibility. I'm hoping that does become the case. So, in summary, very high, like I would say, risk to reward ratio right here. They are priced very cheaply based on what they're actually expected to earn for a calendar year or fiscal year 2021, I should say. PE of about 9. Their historical PE is about 19. Yeah, so if this revenue were to become more predictable in terms of expected to last, you would roughly have like 100% or so upside in the stock at this point. However, it's not really that clear cut. And I do expect to see some regression within their diagnostics unit. However, I do not think it will return to the pre-COVID-19 baseline. So the real target is somewhere in between here. In terms of actual numbers, it's basically you're talking about a guesstimate here at best. But it should be higher than it is right now. That's I think there's a solid floor. I don't see.
I'm looking at a really good floor right now on the chart, actually.
Yeah, that would be interesting. I know they had a major kind of sympathetic move compared to one of their competitors who said that their COVID testing rate has dropped, and they're starting to see they think of peaking in the COVID-19 testing. So I know they had a real sympathetic move on Friday, which is why I instituted the play on Friday. But yeah, if you want to take us through that chart analysis,
Got it.
Know what you think? Perfect.
So this is the chart. As you can see right here, this is COVID. So this is March when everything happened. So they were chilling around $50, $55 for kind of a long time. They were there for a while. That whole thing happened, and then you have everything Vinny just said with all the increased testing. So let me zoom in here. So this is more recently. So this is where it's interesting. So what happened here, Vinny? Another competitor reported earnings?
Yes. Yeah. Well, exactly. They missed on revenue, so the COVID testing was dropping in volume.
Perfect. Not them, though, right?
Not them.
Company.
No.
Okay. So this scary bar here dropped them all the way to what I would consider a pretty good buy range. This dashed line is the 100 small moving average. As you can see, it has respected that. The only time it broke this was during COVID, right? And every stock broke every average during that time. So that's not really a telling sign, but it bounced here. It bounced here again in November. It bounced again at the beginning of our end of January, and it's now approaching that line again. Now, if you look here, right there, that peak, that's going to meet with the 100 SMA at 73.50. And this is going to be a very, very, very strong floor. So this is a good buy zone where it's at, or even closer to 73.50. You can't really get much better than that.
Yeah. I think my opening was 74.
Yeah. You can't get much better than that. That's pretty good. This is also a solid swing trade. It's going to be in mine too.
Yeah.
There you go.
Interesting position there. Both swing and potentially longer term implications there. So. Well, thank you guys for joining us again, and please remember to like, comment, and subscribe. Let us know what you think of this one. This is definitely a interesting play from multiple angles.
Absolutely. We're going to do a swing trading video next for the looks for the week, so stay tuned.
All right. Thanks again.